Right now, something unusual is happening with Nuburu Inc., ticker symbol BURU. The stock is sitting around 33 cents per share, down about 2 cents on the day, which doesn't sound like much. But behind that tiny price is a massive war between retail traders and short sellers. More than 26% of the company's entire float is sold short. That means for every 4 shares trading out there, 1 is basically borrowed and bet against. You don't see numbers like that unless something big is going on. And when a setup like this exists, it usually ends with either a total collapse or a face-melting short squeeze. Now imagine this: millions of shares failing to deliver, dark pool data showing over 50% of short volume happening off exchange, and a small cap company trying to reinvent itself from a laser manufacturer into a defense and security tech player. It's chaos, it's hype, and it's risk, all in one tiny 33-cent stock. So let's unpack what's really going on here. BURU isn't a household name, and for good reason. This is a small microcap company that once focused on blue laser technology, mainly for welding copper and reflective metals used in EVs and 3D printing. Cool idea, but here's the catch: the company barely made any money from it. We're talking only a few $1,000s in revenue over several quarters. So now, Nuburu is trying to pull off a total transformation. They're not talking lasers anymore. They're talking drones, defense contracts, and military tech. In September, they raised about $12 million through a public offering. That move diluted shareholders, but it also gave the company the cash to chase a brand new direction. Since then, they've partnered with Maddox Defense to build next-generation drones, specifically targeting NATO markets. They also moved to acquire Orbit, a company known for operationally resilient software, and they took an initial stake in Techni, an Italian defense electronics firm. That's the story that's got people on Reddit and X buzzing. A tiny company trading for pennies, trying to roll up defense tech assets and position itself for huge government contracts. For some investors, it sounds like a potential $10 stock hiding in plain sight. For others, it sounds like a desperate move to stay alive. Because if you look at the company's filings, reality hits hard. Nuburu reported less than $10,000 in quarterly revenue. That's not a typo. It's less than what some small businesses make in a single week. Meanwhile, its costs as a public company keep stacking up. The operating losses are enormous, and tools like the Altman Z-score, which measures bankruptcy risk, put Nuburu deep inside the distress zone. In simple terms, if things don't change drastically, this company could run out of cash within the next 2 years. And that's exactly what short sellers are betting on. They look at Nuburu and see a company that failed to commercialize its original laser tech, now pivoting into a high-risk industry with zero proven revenue streams. They see the $12 million raise not as a sign of growth, but as a temporary lifeline, one that's already burning fast. And if that wasn't enough, Nuburu recently got a warning letter from the NYSE American Exchange, not even for its price, but for failing to properly communicate its new dual CEO structure. That's a red flag for any investor watching how this company handles its internal governance. But here's where things get even more intense: the short activity. With over 26% of the float sold short, and the majority of those trades happening off exchange, this is one of the most heavily targeted microcaps on the market right now. On top of that, Nuburu appeared on the SEC's Regs HO threshold list in September after failing to deliver millions of shares, 6 million one day, 8.6 million the next. Fails to deliver happen when sellers can't actually deliver the shares they sold by settlement day. Some FTDs are normal, but millions for a company this small? That's not normal at all. It's a signal that something strange is happening behind the scenes, either extreme short pressure or possibly naked shorting, where shares are being sold without proper borrowing. For regular investors, this kind of data is critical. You can check the FINRA and SEC reports yourself, look at short volume ratios, and fails to deliver. When those start spiking, it usually means pressure is building somewhere, and eventually that pressure releases, one way or another. Now let's talk about who actually owns this stock. Institutional ownership is barely above 1%. Vanguard is technically the biggest holder, but that's likely just through index fund exposure, not an active investment. That means this is almost entirely a retail-driven stock. The price is being moved by social sentiment, people on Reddit, X, and stock forums, not by big funds. So what we have here is a pure battlefield. Retail traders versus professional short sellers. Bulls are betting that Nuburu's pivot into defense pays off and triggers a short squeeze. Bears are betting that the company burns through its cash and collapses. There's not much middle ground here. If Nuburu's management actually pulls off a defense deal, even a small one, that could light the fuse. With nearly 27% of the float short, a single strong announcement could send this stock flying. But if the company fails to execute and continues to dilute shares just to survive, that same setup could end in total wipeout. And it's important to note, the company's management has already shown they'll issue more shares to raise capital if they need to. That could keep happening, especially if they don't start generating real revenue soon. So while the short squeeze dream is exciting, the dilution risk is very real. At this point, Nuburu represents the ultimate high-risk, high-reward trade. You've got massive short interest, questionable fundamentals, a hyped-up transformation story, and an extremely low share price. It's a mix that can create explosive moves, both up and down. So the question is simple. Will this defense pivot turn Nuburu into a serious defense tech contender, or is it just a desperate last stand from a company running out of options? Let me know your take in the comments. Do you think this is a brilliant transformation, or just another penny stock trap waiting to implode? Because make no mistake, whatever happens next with BURU won't be slow or quiet. It's going to be violent. Whether that means an epic short squeeze or a complete collapse, that's the kind of setup traders dream about or have nightmares over. Disclaimer: this video is for educational and entertainment purposes only. Nothing in this video is financial advice. Always do your own research before buying or selling any stock, especially high-risk microcaps like BURU. Investing in small-cap companies can result in total loss of capital.